Good evening, all. This is Shay Horowitz. This is our weekly free newsletter, ShogunTrading.com. I have some good news for you. The summer is over. The summer has been absolutely hellacious for us. We caught a very, very nice trend right before the summer kicked off. Very, very nice trend down on S&P 500. And ever since the summer started, we've been doing this. And that sucks because there's no trend whatsoever. There's two ways you can trade this. You can sit out and you can say, I'm not going to trade when the market is going sideways, or you can look for the time frame that the market is actually trading on. Remember, the market trades on different time frames, different speeds. It's the same thing as a car. You have different gears all the time. So what we look at is, for example, is hourly charts. And the reason why we look at hourly charts is because the hourly charts does show some waves. Wave up, wave down, wave up, wave down, and quite a few of them. And you can see that they're constantly and they're about the same size. And that's the kind of trading we're having right now. What we've done over the summer is we've brought our charts down to hourly basis, and we're able to take advantage of the short-term trades back and forth all the time. That worked out pretty well for us because we're able to maintain that 2%, 5% trades over and over and over again. That worked out pretty well. Notice the S&P 500 has support right now at the 1260 and a resistance at the 1302. As long as we stay in between it, we're going to stay in between it. That's pretty obvious, but that's the way the market's going to trade. What we're looking for right now is either break to the upside or break to the downside. Frankly, I don't really care. All I want is a break, because when I get a break, that's when we're going to get the next big trend. The big trends is when you shift into high gear. That's when you put on the cruise control and you're able to cruise either up or you're able to cruise down. But you have to penetrate either the support or the resistance. Got to be honest, I got pretty excited when we penetrated over here, but that was around August 11th, and that didn't go anywhere. That got slammed back down. I thought we were going to get another trend, but we didn't. I'm leaning towards the short side right now, and I'll tell you why. Because the moving averages, everything, the red line, which is the 200-day moving average, all the trends look pretty much down. So if we break to the downside, I think that would be more obvious. But you have to stay neutral. You have to stay without any kind of opinion, without any kind of bias, and you have to be able to follow the market. Now, again, what I suggest doing right now is trading those hourly charts, trading the short-term trades. Otherwise, you're just going to be trading water because you're not going to be able to catch any of these long-term trades. When we had this, we were on daily charts and we were able to catch quite a bit of the trend. It was great. We were able to basically buy short and hold. But over here, very, 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 very tight. Give you an example. Titanium metals, it's one of those very, very quick trades that we're doing right now. I'll show you the 60-minute chart, and you can see the type of trade. Enter at 12, and it went all the way up to 14.90. It's pretty neat. I mean, it allows you to make those short-term profits while you're moving forward. DFS. Discover Financial, also 1573 up to 1667 so far, and I still think the stock is going to go. Don't enter this one because it's already out of the gate. But that's the type of trades that we're doing. And these are just from the last week, which was a holiday week, and so on. But they're working pretty well for us. So there were a few more, but I don't exactly remember them right now. This week is going to be a short week. It's going to be a 4-day week. Republican convention. More hurricanes coming. We have Hannah. We have Ike. Gustav is still among us. We're going to have to see how Gustav is going to affect Louisiana and the oil coast. And then Hannah, how it's going to affect, looks like the east coast of Florida, east coast of Georgia, Carolinas, and so on. We're going to have to see how Ike is going to approach the U.S. This is hurricane season. It's something that we're used to. It's something that's completely normal. By the way, if I lose communication, you know why. I live in South Florida, so that's one of the reasons why we really pay attention to the hurricane season. Go back to that. S&P 500. I'll show you the Dow Jones Industrial Average as well. You can see it's basically the same kind of chart, just back and forth movement all of July and in August. And the NDX is the only one that's actually had some volatility, but very minimal as well, with lots and lots of gaps and lots of noise. So anyway, so we have a pretty busy week coming up this week with lots of news, hurricanes plus the Republican convention, but we'll have to deal with that. I suggest you stay on a short-term basis. You stay on 60-minute charts, 30-minute charts, and so on. Capture your daily profits at 2% to 5% per day. They add up. If you take 2% per day, if you can do it on a consistent basis, 20 trading days a month, that's 40% per month. People don't realize that quick, short-term, consistent profits can be more profitable than the occasional trade that goes 40%. Because that occasional trade that goes 40%, you may exit early, you may missed it, and then you missed your one trade per month. So I suggest you stay that way until you see that the market itself is penetrating. I would suggest that you watch the S&P 500, 1302 as the resistance, and 1260 as the support. That's about all I have for you for tonight. Again, summer is over, and I think that we're about to get the trend, so get ready. Have a great night, and I'll talk to you next week. Take care.